Michael, when the euro fell against the dollar, we saw the U.S. stock market rally. More recently, we've seen the euro rally, and the U.S. stock market continues to go up. Now, does this mean that the euro no longer has an impact on the U.S. stock market?
Yes and no. Let's first analyze why the U.S. stock market liked a declining euro first. When you have a currency that's depreciating, that's inflation that is happening in the country that's being imported, right? So your goods become cheaper. Your goods become cheaper, suddenly money's coming and flowing into your economy from your exports. Now, obviously with Europe, there's a huge deleveraging process underway and significant deflationary pressure. So the US stock market liked it when the euro fell because it meant inflation pressures were kicking in. That was pre-intervention though. The moment that Draghi effectively said, we'll do whatever it takes to preserve the euro through this unlimited bond buying plan the ECB is going to enact, that now changes the source of the inflationary pressure. Before it was the currency itself falling. Now the ECB is going to try and force reflation in Europe. Because of that, that actually increases confidence in the Eurozone. It increases the possibility that we will not see another Lehman scenario through Spain, through Italy. U.S. stock market likes that. So it's a very nuanced answer. Right now, the most important thing is for confidence to continue to increase in the Eurozone. You do that, you're going to see earnings recover in Europe. You're going to see earnings in the United States recover as well.
And then also the euro will continue to increase, I would assume. If that's the case, how high can the euro get?
Yeah, so this is what's, I think, very, very interesting here. This entire trade has been about the end of the Eurozone. It's clear now that, at least for now, that's not going to happen. So you had a tremendous overreaction in a lot of European assets on this risk that countries could leave the euro, that they go back to their currencies, and then what happens to the currency risk from those assets. Euro's going to exist. So all those stocks that went to unbelievably low levels, all those assets, all of that collateral now, is selling at a fire sale price priced as if we were going to see an end of the world scenario, which is not coming. So now think about that if you're a foreign investor. U.S. stock market has done this. Okay, do you want to chase the S&P 500 when it's done so well, or do you want to maybe now look at Europe, European assets, which are trading at fire sale prices for a rebound?
This market has fewer players.
We're coming into a Monday where we're going
Would enter in a new stage at SAC.
It's a stock picker's market.
Welcome to the 5 dumbest things
Apple
on Wall Street.
reported earnings.